Great to have you on our show, therealestateexperts.com, the real estate show for Metro Atlanta, where you'll learn so much, earn more equity, save more money. Our next guest will help you do even more than that. He'll help you in the financial world. Heath Beam, Singular Private Wealth, singularprivatewealth.com.
Always a pleasure, Brian.
So I'm getting a lot of questions in all factions of finance. Housing, I'm sure you're getting them in your business. We've got this massive new tax plan of the likes we haven't seen in 30 years. How is this impacting people? What are the kind of questions or concerns you're getting in the financial world, not just housing, but in your financial world, advising clients about taxes and the new Trump and Republican tax plan?
Yeah, a lot. I mean, this is obviously consuming a lot of our time and energy at the moment. We've really dedicated ourselves to more fully understanding. And I've had multiple meetings with CPAs, tax attorneys, et cetera, from different parts of the country. Multiple meetings with clients already about it. So, yeah, we're dedicated to more fully understanding it. And there's a lot of stuff that we still have to get more clarity on. In terms of the regs from the IRS and how some things are going to be treated. But overall, our sense is that it's going to be a very positive thing for most Americans, whether they be individuals in good jobs or if they own businesses.
You know, Heath, one of the things we're seeing in the housing business, and I'll ask this question for two reasons. Number one, you deal with clients with a pretty decent net worth, and they've got some money, they got some retirement, they probably need life insurance, the whole package. Singular Private Wealth, by the way, Heath Beam is with us. And so we're getting in the housing business for those same people I just described who own maybe homes that are $750,000, $1 million, $2 million mortgages. This new tax plan reduced the amount of tax deductibility of the home mortgage down to, I think, $500,000. So that is a little negative at the top end of housing. It's not affecting anything below $500,000 by any stretch. It's hot as a hot potato. How do you look at that in the whole financial planning picture, the house, the tax deductibility, and in general, are there any nuances like that in personal finance and investment that you're having to mitigate because of the tax plan, sort of unintended negative consequences?
Yes, there are. I think I think the new deductibility limit is $750 of first mortgage, down from $1 million. That's one. Look, there are a lot of components of this that I don't really understand the ideology behind it. It's not a perfect bill by any means. That's one of the things that I just look at and kind of scratch my head and go, why? Limiting the SALT deductions, which is state, area, and local taxes, to $10,000. Don't really understand that one. That certainly is going to negatively impact people in the higher state tax brackets like New York, New Jersey, California. So yeah, there are certainly things that we're having to look out for. I mean, there are certain planning fees that are no longer deductible. Like, for example, the fees that we have always deducted for tax preparation, those are no longer deductible. There are certain investment planning fees that are no longer going to be deducted. So yeah, there are things that we have to be cognizant of that are, as you said, maybe unintended negative consequences of the bill.
Heath Beam is with us, Singular Private Wealth. More on him at singularprivatewealth.com. That's SINGULAR, singularprivatewealth.com. So would it be safe to say that in some regards in housing we're seeing this, but perhaps more in personal finance and investment, which is what you help clients do, are you seeing a bit of a scrambling going on by your team? It's kind of like you probably are smooth as a duck sailing across the pond, but the feet are moving with the tax bill, trying to figure out how to make sure that every single client's tax plan, their investment plan, or retirement plan, gets adjusted so that they can benefit from the plan and mitigate the damages. That's got to be an overwhelming task, right?
It's challenging. But it's what we signed up for. So we're in this for the long haul, and we're on board to help people figure it out. I will say this though. I think that we as planners and as advisors, whether we be in my arena, your arena, tax or legal, I think that what this tax bill does is give us an opportunity as advisors to work with our clients and become even more valuable and provide more value to them over the next 8 years than we have at any point in our careers thus far, because there are a lot of opportunities inherent with this bill that we have that have not been present before. And there's a lot of this. I mean, look, this thing is scheduled to sunset January the 21st of 2026. Will that happen? I don't know. Will it not happen? I don't know. I do know that there's a strong historical mathematical possibility that the Republicans will not have control of all three chambers of the government on January 1st, 2026. So there's some of this stuff that we have to approach with the thought process that we may have a window here to take advantage of some things that won't last forever. And then it's a matter of figuring out what do we need to act on today, tomorrow, or not at all.
Yeah. You and I approach our respective businesses the same way. I approach real estate. You approach personal finance and retirement investment and planning sometimes you get a bag of lemons. Let's make some lemonade out of it. So when there's chaos, if you got a smart planner like you, a smart agent like me, what you end up doing is creating lemonade out of lemons and making this an advantage. The chaos can become an advantage for not only investment, but for tax mitigation for clients if it's done appropriately. I think there's lots of opportunities in the housing business. What are you seeing in planning? I'm going to ask a housing related question next, but what are you seeing, Heath, in planning with the biggest issue or challenge that people are coming to you with, or that you're needing to address with retirement planning as you do because of this tax bill? Is there one overwhelming circumstance that you're seeing more often than not?
Yes, there are two. If you own a business, there are a lot of both pitfalls and opportunities, and I think I want the emphasis there to be on the opportunity. If you own a business, there is some opportunity to take advantage of some tax savings under the new bill with qualified business income as an S corporation, et cetera. There's also an opportunity for businesses to evaluate whether or not it makes sense to recharacterize their business from an S corp to a C corporation. The C corporation status has been out of favor for quite some time. This new bill brings the viability of having a C corporation back into the equation. And to answer your question about individuals for retirement, one of the things that we're looking at in virtually every situation now, even more closely than we did before, is the concept of a Roth IRA conversion, and then repositioning IRA assets from either traditional to Roth, or repositioning IRA assets into life insurance.
How do you?
So those are the.
How do you transition? And by the way, we're with Heath Beam, singularprivatewealth.com. Singular Private Wealth, the name of the company. Heath, how do you do that if you're a higher income earner? Can you actually switch one of your IRAs over to a Roth at this time?
You can. There's no limit in terms of it doesn't matter how much money you make, you still have the capacity to do that. Now, you have to be more careful with it than you once did, because prior to this tax bill, if you recharacterized a traditional IRA to a Roth and paid the tax bill and then changed your mind, you could unwind it. You can no longer do that. So it is a bell that once you ring it, you can't unring.
Gotcha.
So it works. The concept works well, and it's a calculation you have to do on a case by case basis. And as you know, everybody's situation's different, and our philosophy here is that everybody deserves a custom tailored financial plan. So everybody's situation is a little bit different, but it works really well potentially for people that are already retired, they're over the age of 60, and have the ability to either use funds from the IRA to pay the tax without penalty, or people that have liquid cash and non-qualified assets that they can use to pay the income tax.
Interesting. Heath Beam with us, Singular Private Wealth online, singularprivatewealth.com. Heath, final question today on this new tax bill. We're talking about what the Republicans passed in, I think, December. You know, in a general 30,000-foot view, because you deal with a lot of 6- and 7-figure income earners or people that have earned at that level and maybe are entering retirement, what are they saying to you? What are you hearing from them? What are your feelings about housing and how that is shaping up going forward from an overall financial standpoint? Any gut checks, feelings, themes, things you're hearing consistently with regard to sentiment of the housing industry?
Yeah, so I'll answer that question in two parts. Number one, I think that for the most part, people seem to be excited about this bill because most people are going to see more money in their pockets. And as you and I both know, when people have money in their pocket, they tend to feel a little better than when they don't. So I think people are excited about it. In terms of housing, the thing that we seem to hear more than anything else is people's concern that we may be approaching another bubble in terms of housing. Whether or not that's I'm not an expert in your field. I don't know the answer to that. But in terms of what people seem to be concerned about, for lack of a better word than concern, is that we may be entering another housing bubble, and as interest rates rise, obviously people are concerned about rising interest rates. You and I have had that conversation many times. Rates have been too low for too long and have to rise, and they're now rising, and rising interest rates present some peril, but they also present some opportunity for investors as well, whether it be in housing or in the fixed income marketplace.
Yeah, that's go ahead.
Well, those are the two things that we hear more often than the most often in terms of your space with housing.
Yeah.
They're concerned that we might be approaching another bubble, and they're concerned about rising interest rates.
Yeah, I think you're 51% likely that we are approaching another bubble. I think it's almost 50-50, but I'd lean toward yes instead of no. Heath Beam, that's great information for people at all stages of income and finance, what we've just covered with this tax bill. Obviously, you can tell Heath is incredibly knowledgeable about approaching this with good judgment and coming up with a plan. So if you want to personalize what you just heard down to your exact situation, Heath Beam, singularprivatewealth.com. And what's the toll-free number that people can call?
1-877-SINGULAR.
Heath, always great to have you. And that's SINGULAR, 1-877-SINGULAR. Heath, great to have you.
Yep.
Coming up next, we want to get back to what we were talking about, the big disruptive force that could really have an impact on housing. And some more thoughts on how that could be good or bad for the housing business and your home values. The realestateexperts.com radio show continues in moments.